my inspiration to have this webinar is really through discussions with one of our partners, our Global Governance Link affiliate partners. So the way Aviva Spectrum works is whenever there's an internal audit issue with any of our clients around the globe, we have members that are already part of what we've created called the Global Governance Link. It's an affiliate program. It's an invitation only. There are 5 major criteria to get in, and we have a wonderful firm that we're going to introduce in just a bit that's part of the group. So the inspiration was this firm that we've come to know and love in India is one of the top tier firms when it comes to using massive technology to monitor and audit massive amounts of data. And we not only have one case study, we actually have 8 different case studies to elaborate on how to use ACL, IDEA, etc. to do both preventative controls and then detective controls, not only just on operational audits, but anti-fraud related type of controls, which is kind of wonderful. So I'm going to introduce myself very quickly. Because I know most of you have already know me or know of me. I'm Sonia Luna. I'm the CEO and founder of Aviva Spectrum. And with me today, I have Ramki. He's the managing partner of PKF Sridhar Santhana. And I have Narsi from the same firm. So Narsi and Ramki, can you please just say a quick hello and give your quick background for the audience today?
Good morning from India and good evening to all of you. My name is Ramki. I'm a managing partner of this firm in India, which represents PKF International India. And I'm a chartered accountant, a cost accountant, and also an SAP certified consultant in FICO module. And I've been in profession for 38 years now. And I've handled assignments which are internal audits and consulting assignments from around the world, from Australia to Argentina, almost in all parts of the world. And I have been on the Indian Audit and Assurance Standards Board. I'm also on the European Professional Standards Committee of PKF International. And then I handle various types of consulting, which includes mandate due diligence, valuation, and attestation, and strategy consulting, and internal audit. I will now hand over to Mr. Narsi.
Yeah, Narsi, can you speak up a little bit too, just to make sure the microphone everybody can listen?
Yes, of course. Hi, good evening, everybody in the other part of the world, and good morning to people in India. And I'm Nafsi here. I'm a partner with this firm from PKF India for the last 2 decades plus, and I'm basically a chartered accountant with CISA and also CIA. Been into a lot of IT related consulting, just clubbing with internal controls, primarily focusing in hospitality, and also an expert in SAP consulting and SAP related information technology services. And my special focus area is to do this EPM, enterprise performance management competencies, primarily making sure that there is a digital transformation happens in terms of all the business activities, and especially with the help of the analytics. I've actually implemented CMM. Yeah.
No, go ahead. Yeah, you've implemented a CCM.
Actually implemented CCM and I can say we have started with the CCM actual implementation in 2007 with some of our clients, and it's now more than 8 years now, with almost 8 to 10 profiles where we have implemented already, gone live with that, and being put to use by the various clients across India. And all the illustrations that I'm going to give in today's live examples actually we found during our experiences.
Exactly. I call Narsi kind of the double threat for those of you who don't know what he actually has accomplished. For example, there's very few auditors that I know that have worked with such large systems like SAP and other major packages like Oracle, etc. He's the guy that understands the tentacles, okay, of an audit program like ACL IDEA to actually capture data, create a mirror image of it, come up with test scripts, anti-fraud, etc. type scripts, and create those preventative and detective controls. So he's kind of your double threat. In other words, he understands the debits and credits, but to go into systems and actually audit massive amounts of transactions, this is actually one of the few people that I know personally that can actually go into those major systems and capture it and actually conduct custom operational continuous monitoring techniques that, let's say, don't have to do with SOX or don't have anything to do with the financial numbers, but just pure operations. He actually knows how to do that. So I'm really privileged to have both Ramki and Narsi with us today. And Narsi, whenever there's an opportunity for me to move forward, just say, just please move forward, and I'll get the presentation going. So let's kick it off. Narsi, do you want to kind of cover the inspiration of this webinar that you and I have co-created?
I'll do that,
Okay.
Sonia. Ramki here. What happened is we used to do audits of some large hospitality companies in India. And in the process, we used to find frauds, either in front office or in the F&B. And the CFO and the director of finance once asked us, because we used to do an audit once a year of the hotel. So he said, yes, you do find frauds, but by then the fraud has been happening for some time, or the guy is bolted. So is there some way in which you can do this on a continuous basis, on a real-time basis, so that we catch the guys as they do it? So this was our first inspiration by which we said, okay, let's try doing something like that. We started with something, and then, of course, we have been perfecting it over the years, especially when you go abroad. There are other types of systems, other types of people, other types of modalities. So we had to modify what we used to do. And I can say that we have come to a reasonably good position where we are able to prevent and detect frauds as they happen. And our recent inspiration has been from Google. Of course, Google is changing the world virtually, like Apple and Google are now changing the world almost every day. Now, they used to have this original mission to organize world's information and make it universally accessible and useful. I thought nothing could be more grandiose. But then Larry Page now says it's probably too narrow. So they are trying to do something in life sciences, which is a great inspiration for us. They are trying to change medicine from being reactive to proactive. Larry Page says we don't want to go to the doctor when ill. It's like changing oil in the car when it breaks down. We don't do that. So they are working with nanoparticles now. These are 1/2000th the size of the red blood corpuscle cell. And they'll be painted with the protein or genetic material. They'll bind themselves to the cancer cell or some other cell. And then you pop a pill which can course through the entire body of the people. And they will have wearable devices which can concentrate these nanoparticles, and you can query them. So this means that there will be absolute constant monitoring of the whole body and the various cells, and we don't have to wait for the diseases to come and affect us. Before they start doing something, they'll be detected and treated. This we thought was a great inspiration. This is what we are going to apply to proactive auditing.
It's taking technology and then creating a proactive it's preventative controls in this case in our own bodies,
Yeah.
where a wearable device, who knows, it might be a watch or whatever that they're going to use, or Google Glasses, yeah. And you can see what your body is doing, and you can augment your behavior to react to that information.
Yeah, probably it will also send a message to the doctor.
Exactly, of what's going on with their patients.
Yeah, correct.
So let's talk about why CCM.
Yeah. Now, we all know the COSO framework has monitoring, which is timely assessment of the design and operation of controls. In our opinion, CCM very effectively manages risk and provides greater transparency in the whole monitoring process. And if you look at the drivers of CCM, there are three: strategic drivers, external drivers, and operational drivers. If you look at strategic drivers, globalization is really driving pressure to improve governance and accountability. If you take groups like Tata's in India, I think 60 to 70% of their income now comes not from India, but from rest of the world. They're all over the world. In United States, UK. I think they're the largest employers of UK. So next is the external drivers, which include the regulatory requirement. If you take India, for instance, we have the new Companies Act 2013, which has brought in like SOX 404, like reporting, internal controls on financial reporting. And we also have a very unique reporting requirement in India now. If a fraud happens, then we are supposed to report it to the central government after, you know, taking it to the audit committee and the board. We need to directly report it to the central government. This, I think, is unique in the world. And business risks are increasing day by day. The last one is the operational drivers. The ERP complexities, be it SAP or Oracle. And there is an all-round keenness to reduce cost of compliance because, audits are also getting costly. And in India and I think rest of the world also, the conduct of employees is degenerating, ethical standards are falling. So these are the various drivers which lead to a requirement for CCM, which is something which really helps the company on an ongoing basis, on a real-time basis. I'll now
So
hand over
Ramki,
to Narsi, who will say, yeah.
Ramki, can you restate that external driver that the new federal law that India passed? Can you restate that for the audience?
Yeah, yeah, it's called the Companies Act 2013. Our old Companies Act was 1956, and we didn't have much happening over many years. But suddenly we have woken up and we have taken it to probably from, I keep saying, bullock cart to the rocket science age. So they have said now the auditors have to report on internal controls, they have said, but the Institute of Chartered Accountants of India interprets it as internal controls over financial reporting, which means that companies will have to do their own testing and then show it to the auditors, and auditors have to be not only reporting on truth and fairness of the accounts, but also whether internal controls are in existence and in operation. Exhaustive testing will be required. People will have to learn about COSO 2013, which Sonia, you will remember I came to you mainly because of that, because we wanted, some training programs and things like that. That's how I came to you, because your boutique consulting firm is doing a lot of this.
Mhm.
And the second one is, yeah,
Yeah, our firm. So those of you who are with us live right now, especially if you have operations in India, this is a huge game changer. So imagine Sarbanes-Oxley 404 hitting India. And Ramki, can
yeah,
you confirm that even though the law passed in 2013, isn't this the year 2015 that they're going to have to comply with it?
yes. 1st of April 2015 is when they have to start complying, and the time is running out. A couple of months only are there.
Mhm.
So the other one, which is fraud reporting, is already law now. If there is a fraud happening in the company, we now have to directly report to the central government. That's already in action. But the ICFR SOX 404 type of reporting is effective from 1st of April 2015. In India, we follow the April-March year. So we have no problems till March 15, but come 1st April 2015, this becomes a requirement.
Right, right. And I wanted to, I know, Narcy, it's your turn to take over, but I wanted to quickly try a polling question of those who's really, you know, doing continuous monitoring. So I put a polling out there for you, the participants that are live with us. Please answer yes, no, or I don't know I've broadcasted the poll, so I'd like you guys to quickly answer the polling question. Are you using continuous monitoring in your organization? So the polling's open. You should see it at the right of your screen. Yes, no, don't know. Okay. All right, we'll see if that has worked out. Shows. Okay. Okay, I'm just trying to see if there's a technical glitch. Okay, it looks like it didn't work on my end. It must be something that I couldn't get. I'll probably try a little bit later to get the polling out because I know it's for some of us it's kind of nice to see where everybody's at. Let me see. Are you using? Okay, so I'm going to try it again. It should be a polling that popped up for all of you. Oh, I'm going to drag it to the main screen. Thank you. So it's in the main screen now. My apologies, I didn't move it into the middle of the screen. So who's using continuous monitoring right now? I'm going to close the polling in about 30 seconds. So yes, no, don't know in terms of who is actually using some type of continuous monitoring in their organization. Yes, no, or don't know. So it's in the middle of the screen, so all of you can now hopefully see it. I'll try to expand it. Okay, so it looks like there's a fair percentage so far. I'm going to end the poll and broadcast the results. And it looks like about 45% of you said no, 40% of you said yes, and then 13 or 14% said that you didn't know if your organization is actually using continuous. So it's almost like almost a 50-50 mix of yes, no for those of you who are actively participating in this poll. So I'm going to close the poll here. All right, now Narcy, I'm going to switch gears and have you go ahead.
Yeah, sure. Thank you, Sonia. Okay, now we are looking at the framework for the CCM as the introduction was given by my partner, Mr. Ramki. This is actually I'm trying to take you through the framework for CCM implementation and then going forward in this presentation. So what is that we are looking at as a framework here is primarily how to go about implementing the CCM. So to start with it, we should first determine what are the responsibilities and roles that one has to look for and the things that one has to monitor. Then the minute you identify the roles and responsibilities, then you can easily define the key performance indicators. That is, you can identify what needs to be monitored, both at the level of transaction level and also the level of process level. What happens is otherwise, if you are not defining clearly the responsibilities, then your ability to define the KPIs become difficult. What needs to be monitored is not known. So we might end up doing a lot of analytics, but at the end of the day, it doesn't give the results that we need to see. So many of the CCM projects actually end up with a kind of the end result is not really giving the end result what it has to give, and it doesn't have the focus in which it has to be done. Once we define the KPIs, it is then one has to understand the process level controls that exist, especially in an environment like where you have SAP or Oracle. We need to understand what all the ERP level controls, the configuration controls that exist, so that your test can be done with the help of specific focus in terms of the control that cannot be put in into ERP. If it already exists in, then my test can be towards that. There are a couple of instances which I'm talking about in the ensuing slides where I'll explain about how this particular aspect of understanding the process control is so relevant when you do the CCM framework. And then one has to identify the test that needs to be carried out. Once you define the KPI alone will not give you the test to be monitored. You need to understand what is the process level control that exists. Once we understand the process level control that exists, then one has to identify what are the tests that I need to undertake. Tests are the exact definition of the CCM checks that I'm going to execute. What is the check that I'm going to execute? And for example, if you have an SOD defined in SAP, well, there's a schedule of authority given, and there's a purchase, for example, issue of purchase orders. You have a specific defined, the limits have been done up to $50,000 by some X, 50 to $100,000 by somebody else, 100,000 to 1 million by somebody else. So I need to define the process control that have been existing in SAP. Once the SOD tests have been done and the SODs have been well defined, then I need to look for, is there an order being broken up? So all orders issued between 45 to 50,000 rupees alone will be looked at. Whether for the same vendor, is there any other order for the much lesser value? Is there a split up happening? If I don't understand the process level control, then my what test I need to do will not be meaningful for the KPI that I'm defining. Once you identify the test to be done, the next critical aspect is the identification of the data source. Many times it becomes GIGO, that is garbage in and garbage out. We don't know what we are looking for, and at the end of it, the output, when we get the output, we end up telling them that, oh my god, this is not the output that I'm looking for, because the input that has gone in is incorrect, especially in environments like SAP or Oracle. When you do when you deploy maybe tools like ACL, where you are going to link it to SAP's tables, one need to understand which table, which field they are looking at. Otherwise, what will happen is they might end up looking at an incorrect information. And also the purpose of the test has to be understood before defining the data, because unless you understand the purpose and the ultimate objective of the KPI that we are going to monitor, your data source has to be specifically in sync with that. Otherwise, you will not be able to then apply the technology, the exact utilization of the tool, which tool that you're going to use, whether it's ACL, IDEA, or you can do a tailor-made tool in SQL. Even some corporates have even used Microsoft Excel as a very advanced application, which you can use with a lot of macros in that. We have done even scripting with Excel to even access data from SAP, and SAP script can be used for that. So which technology to be used, that has to be defined based on the test that I want to do and what is the complexity of the data I am going to have, what is the complexity of the computations I'm going to do for the purpose of this CCM. Certain cases where I'm going to give some examples where there won't be any complexities, only to filter, extract, and maybe put it in a particular defined way. In that case, there's no computation involved. Where you have computations involved, then we need to define the technology that I'm going to use. Accordingly, one has to look for and apply the technology. Of course, when you apply the technology, you need to look for the cost benefit as well, because certain technologies are expensive in nature. You need to pay for the license fees, the hardware requirement, and all that. So here the cost benefit analysis comes in. And of course, once you define the technology, you need to do the implementation part of it and then do the follow up and refine the process again, because the refinement will come once you do the implementation. Then you may find that the exceptions have come down drastically. So what is relevant as a CCM today after 2 years may not be relevant for you, because your process maturity would have come in. So your process level exceptions would have come down drastically. So then that particular CCM will not be that significant for you. Then in that case, you need to refine it and take to the next level. So CCM is not a one-time approach of one-time implementation, just forget it and then go on. No, it has to be kept on. We need to keep on uh, revisiting the need for that. How are we doing it? Is it right? Is the KPIs defined relevant to the business processes today? And are we looking at a as an organizational process maturity synchronized version? Because otherwise what happens is your organization will have certain level of process maturity, but my CCM will become irrelevant after a point of time. So
And
that's why we need to do a follow-up and refine it. Yeah.
and then Narcy, just to chime in a little bit, in LA, I actually work with a couple other colleagues to create a chief audit executive roundtable. We meet quarterly, and I'll tell you one of the reasons why I have this green arrow on this: identify key performance indicators to be monitored. This is the biggest issue most of them face. Not the fact that they can't figure it out. They need buy-in from the various departments. For example, we have a client that's in the online dating industry, and it's an e-commerce business. It's a subscription model. They have probably one of the top 10 uh, sites. So their portfolio is a bunch of dating sites, not just one. And they've got a bunch of data, okay, but marketing as a department has their own metrics of what is a key performance indicator for the operations of the business. So they're doing a relaunch, and some of the relaunch items is dealing with mobile devices. So how to make those online dating sites, since they have a catalog of different ones, they're trying to figure out those key performance indicators. Okay, which one should we launch first to be applicable on the iPhone or a Android mobile? So getting the department heads to agree what is the core metric to measure, that's been one of the bigger challenges. But the understanding of the process, internal auditors doing a walkthrough once they have a clear narrative is easy to do, but getting everybody to agree what's the key performance indicator, meaning brainstorming sessions, etc., seems to be a little bit of a challenge. And the other part is making sure that you've identified the right tests. So we may think it's accurate and complete and timely when we create the test, but I've noticed that there's a couple of chief audit executives that have cybersecurity issues, right? They actually didn't understand, let's say, the timing delay when a batch goes from one system to another, and then they realized that this KPI should have been the timing or the space in between one system interacting with another system and the security around it. So again, it kind of goes back to KPIs and identifying the right tests to carry out your KPI monitoring.
Exactly. All right. Just to give an add-on example of, as you said rightly, between the applications how the data flows in, just maybe 2 weeks back, we were discussing a key audit issue with one of the clients. We found that in the CRM module, whatever goods that they sell have not been, the entire information regarding sales data is not moving to the CRM module. Because of that, they were not able to identify what's all the items they have got into when they have to start the warranty for those goods. And hence, when they get the service calls for that, they don't know whether it is under the warranty or without the warranty. They don't even know that it's been sold because it's not part of the CRM system. And then they found that for 4 months there was no data flow from the sales system to the CRM system. And this was not the KPI at all for them. And they woken up after 4 months. In 4 months, they've lost almost something around half a million Indian rupee.
Wow.
So
Wow. I
this is
mean, talk
something.
KPI needed to be monitored. I mean, not. I mean, it's literally, and so back to my cybersecurity, it's that batch. Okay, how do you know this batch of transactions, 100% of it went into this other system? Because you're saying it went in. And
Yeah,
usually there's a minor test, a walkthrough of one, that doesn't give you completeness and accuracy. There's other validation
exactly.
tests between two systems that you have to do, and it's not a walkthrough of one. And that's what people make big assumptions that the IT department has handled it in terms of the processing of certain batches. And I'm sure most of them are competent. It's just that validation needs to happen, and also validation of timing of when those things have happened. So to your point, I
Exactly.
mean, it could be thousands, it could be millions of dollars, depending on the number of transactions. Then, Narcy, did you want to elaborate on the framework that we were just talking about?
Yep. 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 On this now, in this, I'd like to explain about how the control monitoring is actually in action, and this is actually a source from ACL's thing, but it's applicable in terms of the framework. It's applicable whether whichever is the technology that you're using. We have all have a lot of transactional data. The transactional data that we have is multiple sources. It can be the multiple sources that we have has to be identified for the purpose of tests of the transactional data, against which we need to look at the controls that is existing. What are the control parameters that I'd like to test? That is for the purpose of the compliance and for the control checking. That is, example, somebody should not travel. You have an internal LOAs being put in. That is a levels of authority. I can call it as delegation of authority. If that has been set in, has been adopted, what is the deviations that are there? Significant control breaches with regard to that. In those cases, we can set in kind of alerts, a kind of alert that will indicate immediate intimation with regard to critical exposures. For example, if somebody is breaching a limit of the particular air travel expenses, it need not be waiting for the internal audit department to go and do an audit. There should be an immediate alert that comes out of the CCM that goes to the CFO or to the somebody who's at the level of SBU head or the SBU finance head, and kind of stuff. So this is one type of thing. As the event happening, there will be an alert. The second one is advanced sophisticated analytics that we can do. Today, you can even use certain level of statistical information, do predictable things. That is, there is a predictive analytics that has come into the world with the advent of tools like SAS, SPSS and all, where you are able to predict even at the next 20 transaction, you're going to have some problem, because it goes by certain level of the past trends, or maybe these employees, they identify that in the past these employees are the one who come closer to the breach, but they've not breached. So keep an eye over those employees transactions. So when those transactions, even before it happens, they are able to predict it and give an alert that this person has traveled now, because he would have identified as a based on the administration department's ticket purchase kind of thing, or an advance taken, and say once he's back, you just look at his hotel booking, or in that case even it may even send an advance alert to the admin department that in this case make sure that your hotel booking for this person is only within the norms. I'm just giving this is actually something predictive, which slowly it's actually capturing in the audit field. It's being put to use in business processes, especially in the retail segment, where they're able to predict the customer patterns, customer, uh, I can say customer preferences, how the taste of the customers are changing. People are started looking at that now, and this big data analytics, well, especially when you do a predictive analytics, this be something which we can do, and
And I
especially in
wanted,
this case, you can do a suspect transaction detailed. Yeah,
yeah,
yes, Sonia.
I wanted to comment on some of the alerts. So, um, as Sony, it's a big entertainment company. A lot of folks have heard about the hacking and how it may have happened. So right now we're not clear as to defining a country that may have been involved. But regardless, what did happen, what's coming to the public is there were already alerts. Okay, so to say that Sony didn't have any alerts about a potential breach is an incorrect statement. Okay, they did have alerts. It was this. It was management's action to those alerts. Home Depot had another breach, okay, and there was already alert in terms of a timing delay of certain based on their point of sale system, okay. And what internal auditors need to do is start getting reports. Okay, this is going to be a new wave of auditing. I'm predicting it right now, where these alerts and management's actions, where we will now start taking aggregate data and finding out the owners of this, and why is it that they're always dismissing, let's say, a backup job that wasn't complete? Why are they always dismissing this third party vendor alert? You follow what I'm getting at? And people, internal auditors are now starting to look at aggregate alert dismissals, meaning the different types of way management has reacted to those alerts, um, and making sure that if you're really the gatekeeper, you're competent, you've been objective, and you're really doing your job. And that is, it was mainly human error dealing with those alerts. So there's a bunch of technical write-ups of the continuous monitoring cycle and how internal audit. You most of us have heard of the three lines of defense. That third line of defense is now moving towards this management action according to the dismissive actions that they give to these things that they say, oh, that was, common item to be stated is it's immaterial, it's insignificant. Really? Well, why is it that this is always popping up in aggregate? This is starting to become material. There's something wrong with the process. So that's what I think is going to be the new wave, in terms of the auditors looking at management actions. It's not only the positive things that they do, but we're now going to start shifting our eyes towards why is it that you're so dismissive on these other types of alerts?
Exactly. And many cases it also happens that they'll say that, oh, okay, I know about it. We know about it. This is actually routine thing that happens, and these are breaches, acceptable breaches. What is an acceptable breach? Who can decide about it? Is it happening as a continuous pattern? Actually, in one of the cases, there can be a CCM even for the continuous breaches. Only for the breaches, you can do an analytics. Actually, one of the exemptions that I've given is management action becomes an exception, but that exception has become a rule. I'll just give an illustration for that when we deal with that particular case study.
Okay.
I'll now take it to the next stage where the possible sub frameworks that are there. Sub frameworks can be many. Okay, what are the various methods in which I'm going to categorize it? In this slide, I'm trying to bring out only three major categories that are coming out, which are futuristic in nature, which people have started using it now, which are of significance. So that's why I'm bringing it here. One is on called as descriptive statistics monitoring. That is when we use of statistical understanding of the data and how to interpret that for the purpose of determining what kind of breaches that are happening. Simple, even things like your mean, median, mode, averages. That's what we can use for simple averages that we normally look for. And look out for the complaints of users and look at where the people are coming to us. If you see in many cases, then you might even go back and revise your schedule of authority because the transaction patterns are different. Most companies, what they may do is when they prepare a schedule of authority for the purpose of approval, they might fix certain levels and they may find that the transaction may not be in that range at all completely. Then they need to revisit based on that. But today, we need to look for and then bring out a change in the process if required while closely monitoring the activity. Similarly, measure of spread of the numbers, I call it as measure of variability. That is, what is the minimum maximums of? What can be? Even yesterday I was talking to a particular item which was sold by a retail company to its own holding company at say $8,500, and where the cost is 8,000 rupees. They've sold the same item to somebody else for $7,500. Something is wrong there. You will not sell at a $500 loss, even though it can be of high volumes, but still you can't be selling that way, especially when you're selling to your own holding company at $8,500. This could have been spotted in a minute if they had a CCM. Even before invoicing, the minute they put the sale order for that 7,500, it should flag up that this is too minimum when compared to the average, too minimum when compared
And,
to the cost.
and to share a US story about continuous monitoring being needed. I was at a board level executive training program that a local university offered. And one of our case studies was a franchise called Red Lobster. And so for those that are in the US, that they may have heard of Red Lobster. There was a new CEO, and he had a promotional item that he told the board would convert existing customers to buy some of the higher profit items, such as a drink, or another higher profit item would be dessert. Okay, so the promotion was all you can eat. Okay, crab and shrimp. Okay, and it was at a promotional price of something really, really low. Something, imagine, like $9 or $19. So all of us in the case study, we were all working on this problem. At the end of the case study, one of the questions was, if this marketing plan, okay, didn't work, how soon should have the CEO know that the plan wasn't working to create a profit? Because at that dollar threshold of $19.99, all you can eat, shrimp, crab, etc., they were going to lose money, okay, per person. And the question was, how soon should the CEO know? Well, we had someone in my team, anyways, that worked at Disney, and she worked for consumer products. And she says, "Oh, we know immediately. We know within an hour if a promotion didn't work." Red Lobster knew about it within 2 days. The promotion wasn't working, and they were continuously losing money. The board didn't find out until 3 months later, and it almost bankrupted the company. Okay, because they got their quarterly package, but yet the CEO had known about the losses per day. He kept hoping, right, that the data was going to change, but it didn't. And so it almost bankrupted Red Lobster, and they actually fired that CEO and had to get a new management team, but they discontinued that program. So this is where continuous monitoring works, but alerts, since this is a brand new promotion, an alert should have been put in place, at least to the board level. They should not have found out that they were starting to become cash flow negative every single week, month, etc.
Exactly. So this is exactly what is happening today. The real-time business alerts that are to be happening is not happening today with the, unless you employ a CCM. Uh, and also the distribution of this. I mean, it's also primarily looking at the what is the shape of the distribution of the data. Is it even? Is it bell-like? Is it just picking up at a particular level? What kind of so this can determine your approach towards the CCM. Next important factor that we can use, which is another, I can call it as a second sub framework, is that relative size factor. We call it as RSF. And even for internal audit sampling, we can use this as a methodology by which you can identify the relative size factor to detect errors and frauds in real time basis. Here it's basically you take the largest record within the subset to the second largest record. In some places, we can also exclude the first highest item and then go with the second largest to the next third largest kind. So you can adopt this methodology to determine the relative size factor test. This is used extensively for many of the CCMs that we can do. Next one is a very interesting one called a subset duplicates. We all know that invoice number duplicates can be identified with the help of some of the tests that we can look for. But there are multiple information that we might have. You have an invoice number, invoice date, vendor name, and the amount, and even sometimes material code and all. So we can look for close duplicates. Today we have technology called as fuzzy logic based
Yeah,
duplicates,
ACL.
where you even like
Yeah, the
ACL
fuzzy.
has it, even idea has it, and many of the yeah, exactly.
It's so
Where it
key.
also comes with things like yeah, please go ahead, Sonia.
No, it's so key now. So ACL had updated it because it was a request from its customers to come up with what's called fuzzy duplicates. So what it is you can take, let's say, 3 fields, sometimes 4 or 5, etc., and you're asking it to say, for vendor payments, is there anything, let's say, one letter off compared to the other vendors in the list? So, for example, we have a global governance link partner in Mexico, and AC Metric. He was showing in Mexico, in order to say the word nacional, you might actually have a typo of, instead of saying, spelling it with a C at the end, you spell it with a T, right? And or if something ends in an S, like let's say a name Rodriguez, it could be an S or a Z, right? In Mexico. So long story short, he was sharing like how good ACL has gotten in terms of identifying, especially on FSCPA type items, where you can actually it'll start sorting it by what ACL thinks is somewhat similar, and you can pick the different fields that you want it to focus in on, which is amazing.
Exactly. And sounds like is what they call it as, whichever is actually sounds like the same name. John. Jonathan is also mentioned as J-O and John. J-O-H-N. It can go by any of the spellings that we are looking for. Paul or this kind of thing. The next one is a subset number duplication. It's a very interesting thing that Mr. Mark Negroni has given. Actually, in his book, it's a wonderful book. Actually, I mean, I would like every CCM implementer to read through that because it's a practically written book where every single methodology that he's explaining is implementable, and I personally used many of them.
And for those of you who
This is one of the things which I've learned it. Sorry.
Yeah, and for those of you who don't know who Mark Negrini is, he's Mark. I know Mark Negrini personally. He's a professor. He's written
Oh,
actually about 3 books. Mark Negrini is actually the international expert on Benford's Law. So he's actually recognized as the authority on that because he's made plenty of studies on the applicability of
exactly.
Benford's Law
Yeah.
and so forth. So the book that you're referring to, Narcy, I think this is the second edition, the revised edition, which is more nuts and bolts, if you will. So for those of you who like to,
Yeah.
buy on Amazon.com, just type in. You'll see on the bottom left. I'll make a little note here. Mark Negrini is right here. That's the name, and you will immediately get books that he's written out in terms of these all these items you're seeing on this sub framework. He's listed them out,
Yeah.
and he's even had example test scripts, which in our case studies that we're going to cover in this webinar, we're going to cover those test scripts.
Exactly.
So don't worry about that. But I mean, if you want to apply it to your business, it's very helpful to research that book by Mark Negrini.
Exactly. And this subset number definition duplication is a very interesting thing where you reduce the population to a particular level where you are able to define it within the subset of that. What is the level of duplication? And make the test much more narrow to the specific situation and look for the excessive numbers of such kind of repetitive transactions, which might signal a problem, which can create an alert for you. So these are the sub frameworks which I have explained about, which are key, and there are many more sub frameworks we can implement. From now on, I'm going to take you through possible areas of CCM, and which are primarily like a specific illustrative case studies for next 7 slides. I can put it as, and these are all live case studies which have been used and done by us for possible CCMs that we have implemented. And after that, I'm going to take you through the hospitality case studies which are specific to hospitality industry for hotels. And in this case of the first one with regard to possible areas of CCM, one is on the order to cash. We all live with the situation of order to cash, which we call it as OTC in many of the cases, where the customer management compliance is a key issue. Acceptance of KYC. That is, I need to know my customer. Who is my customer? Is he compliant with taxes? Am I adding new ones without even looking for that? We can run descriptive statistics here. We can also look for the relative size information. Am I selling to an unknown guy or too much of an item to my out of my sales? Who are my top guys? Customer management as an area, we can do a lot of CCM activities. Suddenly, a guy who has been buying only 2%, less than 1% of your sales, suddenly buying 10% of your total sales. Why it's happening? The sales force might know, but at a senior level or the level of CFO or the level of the guy who's handling the ISKIN complaints may not know. Then suddenly one fine morning, if the guy going to stop this buying it, your 10% sales goes down. Do I have a methodology to ensure that there's a de-risking process within the process that is existing in the company? Just giving an example. So customer management compliance is a key area where we can implement CCM, both from the audit perspective and also from the business process perspective to know the process level risk that might be arising out of it. Pricing policy compliance is where I've found major deviations happening in the past in many of the CCM checks that we have done. Because the policy and the SOPs that are fit into the ERP configuration would have been done at the time of ERP went live. Post that, they wouldn't have revised it. Maybe 5-6 years would have gone post implementation of SAP. The ground reality today may be different. So what happens? The exception would have become a rule. This is exactly a case where, so every time there's a breach in the price, we go and get it approved by the head of sales. Fantastic, good system you have. SAP has a system to approve that. So we have a early strategy in SAP. Wow, that's fantastic. When I just do a check, I found that 98% of the sales transaction are happening at the prices which are not as per the pricing policy. All are approved by head of sales. There's no
That's
point
so.
in.
I know. So you
Exactly.
know how you know how I you know how I catch this on the pricing policy compliance? I find out what their
Mm.
bonus structure is for the sales team, and I swear to you, it always ties into this pricing modification. So if for
You nailed it,
example,
Sonia. Exactly.
you know, if I and that's understanding the process of how people are motivated to sell to the customer. So if I have a sales rep that it based on bulk, he gets X bonus. If there's any deviation of that price, let's say within a range, especially when it comes to cutoff, all of a sudden I see price approval, price approval, price approval right before a quarter. So it does two things. One, it creates a crutch for a low performing salesperson, right? Because they know that their boss is just going to like wean them along and kind of let them still be on the team because they keep doing these pricing adjustments. They still get the bonus. That doesn't mean he's an effective salesperson. If they got to keep doing that
Yeah.
over quarter over quarter over quarter, you have an ineffective person and you have an ineffective manager, right? Because they're allowing these pricing adjustments, and that's more of a managerial issue, but I always find these pricing compliance issues whenever I find out there's a bonus structure tied in to prices and quantities, et cetera, that go to certain types of customers. There's always these approvals that seem to always happen within a quarter end or sometimes within a certain promotion period.
Exactly. And it's actually double whammy when we see that in the next point where we are talking about the credit control. Well, the credit control is also busted with the limit busting happening, and people are getting the deviations approval, and approvals have become a rule than an exception. And you can see a pattern between the sales personnel. You can see that as a guy who is also breaching the price, the same guy will also be breaching the credit control. So you can see a pattern. There are some sales personnel whose orders will never be breaching this. There will be certain guys who are always breaching this. It may
Right,
also happen in a specific geographies.
they're doing the
It can
pricing and
also
the
happen in
credit.
specific geographies also.
And then I want to,
Exactly.
for
You
those
can.
of you whose companies are moving into mobile device texting promotions, I want to tell you a brand new fraud trend I'm seeing at the point of sale. Okay, so this is a real story. It happened to me. I got a text. There's a store where I like to buy um, school supplies for my boys. It's a very popular franchise that sells to teachers. Okay, so I'm doing some shopping and there was a promotion. I can get a bag for free if I give them my cell phone number, and that they would give me promotions that are exclusive to cell phone people who allow the texting to go through. Okay, so here's where the fraud is going to happen. I don't need to guess, I know it. First off, the text that I get and the promotion number that I get is in sequential order. Okay, so I get a text on my cell phone saying, Sonia, well, it's not personalized, it just says, our store is having a promotion on any non sale item, 20% off. Give the register person this code. A week or two later, I get a different code because it expired. My original text expired for that 20% off promotion item. My next text is the code, but plus one number. So instead of, let's say the code was 100, let's say that was the code 2 weeks ago. My current promotion is now 101. Okay. So there are two ways fraud, or I can come up with 5 different ways how fraud is going to happen. But I know it's going to happen at that point of sale, that register. Why? It doesn't take very much for a clerk to figure out that I get a sequential order of promotions. They can get a cash paying customer that does not want their receipt, and that happens on a regular basis. Yes, we do pay by credit card, but yes, customers do pay by cash too. As soon as they get that one customer, they are already typing in, they're deleting that old, they're voiding that old transaction, they're adding the new transaction given that promotional code with that inventory item. So my request in terms of the store is alarming them. You should never have a promotion on a text that is in sequential order. It should be some random number that not even I, the customer, should know how the random number comes in, because I can go in and say, oh, it's code 102, and then I can pretend that I got the text and I tell my friends about it, and I just say, oh, it's always in sequential order. Try 103. So those promotion items that I see now in certain um, stores, they don't well, first off, they don't. I don't think they really act like an auditor. They don't see how some of these sales promotions could be taken advantage of at the point of sale system.
Exactly. If you see this area is a huge potential for CCM, especially on the sales promotion schemes and commissions. Complete, especially in the FMCG industry, where there's a direct interface with the customers, there's going to be a huge potential. Retail, FMCG. I mean, we can just talk only in that area for 2 hours. That's a kind of the exceptions that we can look for. Delivery scheduling is also another area where customer delivery, where the stocks are quite in a high demand. There can be slippages. There can be favoritisms than the thing. Well, you don't you adopt the queue or you are able to trying to do the prioritizing. Slippages also, potential slippages in terms of the delivery patterns also. You can see that certain customers are always sent on not exactly on time. There are certain cases where the certain product groups or certain customers are not being done on a on time basis. You can see it can happen only in specific geographies, in specific states in your operational areas, certain things. These are all operational improvement areas where you can use CCM for improving your customer delivery. It need not be an audit level approach, it can be an implementation by the company itself for their own operational improvement. And I found that even people who are looking at Sigma and all kind of thing, well, they want to improve that and bring out the best of the efficiencies in the customer handling. They implement CCM for the purpose of that. So continuous control monitoring need not be something which is audit driven. It can also be business driven. So because I can say maybe a couple of SBU finance heads or SBU heads approached us for such kind of situation. So I think we can delivery scheduling itself. You can do the entire supply chain management where you can look at where all the key bottlenecks that are existing in your system. You can get alerts with regard to that, why it is getting stuck. So you can do a revamp of the entire supply chain approach towards the product. And if I'm like Starbucks, if I'm told, I'm told that in case of Starbucks, they have implemented it in especially for the supply chain.
Mm-hmm.
I will now take you to the next. Yeah, anything you want to add, Sonia?
No. Good.
Okay, okay. Next area is in terms of the what I've given you is a kind of a overall picture on order to cash. There are many more that you can do. All that we need to do is, as I said, you need to define the KPIs, determine the process controls that exist, identify the tests to be done, implement the test to be done based on the data source that you have, and ensure that you revisit that again, making sure that the process areas are improved and your KPIs are redefined again. That's applicable to O2C as well. Now coming to procurement to pay. This is again a typical area where majority of the frauds happen because I make payment. There's a cash outflow here. So this is an area where auditors are finding it more exciting. P2P is an area where it's a huge potential. And even in now one of the implementations where we are doing now for the CCM, we have done some 37 independent tests for the CCM only on P2P because they haven't had an integrated system of inventory and accounting. It's only interface system. So there were certain IT challenges as well. So I built all those into my CCM and giving them a standard solution for them. Coming to this data integrity compliance issues, the first thing that we are looking at the vendor master deduping. Duplicate vendor master is a pain for every finance guy. Every payable guy has this issue. And we found that there are many instances where even in SAP environment, even in Oracle environment, vendor name as per the MM module and the vendor name as per AP module may be different. And so this is something which even at the level of vendor master creation level, we can do a lot of systems. Next important area is ensuring that how is the which I call it as a reasonability compliance. Is it whatever the quantity that I'm buying, whatever the price at which I'm buying, is it reasonable? Is it as per my production plans? Is it as per my requirement? Otherwise, we'll end up buying certain huge stocks and we'll end up with non-moving materials. And many companies, what happens is certain items are taken for granted items. That is, the guy in the buying team can buy whatever he wants to because they know that it's a very important material for that. They can't afford to have a production stoppages. They can't afford to have any of the stock out situation. So they don't put any limit checks in the system for those items. And those are the cases where people hand in go with the vendor, buy which is not immediate requirement. And when they know that there's going to be a price fall, for example, today oil industry is undergoing a turmoil where oil prices are falling. If somebody has purchased in month of June at that prices and said that next 6 months I'm going to buy at the same price and commit for that, what would have happened today? So this is a typical example. This you can build in averages, beyond average numbers, minimum, maximum tests that you can apply for this. Next is in terms of compliance with the contract terms. This is a very, very interesting area where you can do contracted material being purchased from other than the contracted parties at the prices higher than the contracted value. It's also the opposite one where you can also have alerts made for, I mean, it can be anything where I can buy a contracted material from non-contracted party, also buy a non-contracted material from another from a contracted party. That is, I would have agreed for 10 items to be purchased from a party, would have signed an agreement. I may be buying 11th item, which is not contracted. A typical CFO looking at the or maybe a guy who is an accounts payable guy or the guy purchase guy. He will look at the name of the party. Okay, this is actually annual rate contract party. There is no problem, but the item would not have been contracted. The guy will be deviating in the item that is. And then if you look at the volume, then you may find that non-contracted material from the contracted vendor account for 80% of the total purchase that they would have made. It's exact happening actually. I'm talking about in one of the companies. So
Yeah, if you want to
you
talk
have a
about,
contract.
yeah, another area for internal auditors that they rarely ever audit is legal services. So you want to talk about compliance with contract terms. Attorneys are notorious of forgetting about the rate that they committed in their engagement letter. They are notorious for doing so. And they're notorious for putting in additional staff on a case that may not have required additional staff. Okay. It's just
Yeah,
part of the industry trend. And so when you get their data, which you can convert into Excel to do that, um, you can continuously monitor that. I've gotten a lot of people saying, well, the vendor gives me their data in PDF. Okay. There are plenty of tools now, plenty that can convert that
exactly.
PDF into an Excel file, and you create a monitoring mechanism for that monthly invoice because your general counsel has a lot of different cases. They are the project manager of everything legal. Okay, so to manage all the different
Exactly.
firms that they're dealing with and to manage all the different rates that they are being paid is a daunting task. So that literally means that what you're asking a general counsel to do is get a binder, print out every contract, and whenever there's a bill that comes up, that general counsel needs to flip through that contract that they signed, go through the rates, and then determine by person if that's the level that they were at. And since they can't remember what happened last month, they're going to have to go back, look at that invoice and go, well, wait a minute, is it reasonable that I got charged for this case, the same amount of time last month as I did this month? It's really an impossible task for a general counsel, especially if you're dealing with multiple cases. So I tell people, if you're
Exactly.
spending 2 million or more dollars, US dollars, on legal fees in your organization, internal audit needs to be somewhere. They need to be somewhere. I'm telling you that general counsel
Exactly.
cannot monitor all of this. It's too much for any one human being.
Exactly. And that's a place where people actually play around a lot.
Mhm.
Service related, especially in case of goods, actually, at least there's a better controls that you might have. You need to have a stores, well, they need to have a goods receipt note and kind of thing. In case of services, what happens is you don't have an acknowledgement for receipt of goods by an independent person. The person who is receiving the service and the guy will be the same guy will be certifying the invoice. So the chances of same invoice getting certified twice or thrice becomes easier. So this is something which we need to look for, especially when you do a CCM. Price monitoring is the next one, where the both the efficiency in terms of the pricing and also in terms of the monitoring. It's a very interesting case that again we have implemented recently in a client is that CFO is telling my material costs keep on increasing. I don't know what to do. I said simple. Every day morning you will get an report on the previous day's purchase orders raised at the price more than the MAP. That is moving average price. I said you can even do why even up to after the purchase order is raised, even before the purchase order is raised. But it's even before that it's not getting committed. So I said let's do it on the next day itself so that we can even if required the order can be cancelled. We set in 10% as a limit over the previous purchase price where there's any price changes happens over 10% because these are inflationary in nature the kind of product. We could establish that and clearly establish that what are the materials for which there's a price increase happening. In some material we put only 1% as a limit, in some we put 5%, some we put 10%. So according to that, the report was coming to automatic report was coming. You can just do that way. Price monitoring is something which is very important both from the business perspective and also from internal control perspective. Value limit is something which is on LOA. Similarly, in terms of the tax codes and all, input credit possibilities where you have this VAT input credit in which many of the countries that you have, you can claim input credit on the input material and then pay it on the output product. Some cases you don't avail that input credit, we can easily detect it with the help of CCM. Value limit in terms of the LOA compliance, well, call it as levels of authority compliance, material level compliance, no limit. I normally buy a material for a month, not beyond 1 million. I can set as a 1 million as a limit. Anything above 1 million, if I buy in a month, there needs to be a kind of report to the CEO. Hello? Some
Hello,
kind of
I'm
a
sorry.
noise coming. Yeah, okay. Some kind of a typing noise came. That's why I just stopped. Okay. So value limit compliance is something which we can look for. So these are the some of the exceptions that we are talking about in terms of the P2P, procure to pay. Out of that, I've spoken of only about the procurement part of it. I've not spoken about the payable part of it. In payable part of it, there's a huge area where accounts payable team can detect duplicate payments. The first and foremost is duplicate payments. I can tell you duplicate from Australia to South Africa, South America. We have found all across the globe this duplicate payments coming in. Whatever may be the technology that they are using, whether it's SAP, Oracle, Sage, or whatever may be that, ACPAC, Great Plains, this is a biggest problem for the accounts payable guy. And whether it is a vendor induced fraudulent transaction or is it employee who is playing around, but there are duplicate payments happening. So that's something which we can straight away look for. Employee vendor mismatch. This is again a biggest area where many places, especially when you have old credit balances in your account, where you are not paid or you disputed the outstanding, a smart employee vendor can transfer that to his own account and get it paid. Employee vendor mismatch is something which we can look for. There were actually instances where we found that the PAN number in India, which is the permanent account number for income tax, was same with an employee code and also for a vendor. A vendor was a sole proprietary concern with a business name called XXX Enterprises Enterprises. So XXX Enterprises is an entity which is having a PAN number. When we ran the test of duplicates on the PAN number, we found the same PAN number being used by the employee and also by this vendor. So this employee vendor mismatch can be multiple. One, it can be multiple addresses with the same employee name with some other vendor. Employee versus vendor is something which you can look for. It's a major area of control aspect. Vendor data completeness. Is the vendor master data is complete in terms of address, telephone numbers, emails. This is again an area where where we can run the CCM. Split purchase orders and split transactions, which we have spoken about already, well in detail, especially to avoid approvals by superiors. This is something which is again employed all across the world. It has no geography difference. There is no. I used to call it as this something which is omnipresent like God. Both the split POs and split transactions and also the duplicate payments, irrespective of the geographies. Excess claims on unauthorized expenses, especially by the employee claims on travel related, sales personnel's claims in terms of the conveyance, lunch, dinner bills, and kind of stuff. I was talking to one of my ex-colleagues. She's now working with one of the MNCs, and they have the entire international accounting happening in India in the BPO. She was talking about a typical example where they were to do a burn midnight oil for 2 months to another kind of a fraud that was happening by the sales team on the excessive claims on the dinner bills. And they found that people have forged the bills, claimed twice. It's a very interesting thing. They have an Amex card given to all the employees. The guy puts in Amex card, put a claim. You'll also enclose the same voucher and claim it as a cash. And they have this BPO setup. They don't go physically give the paper, so they scan it and upload it. So in scanned images, there is no methodology to map for them, so they have not matched it. So same check was also paid for the same claim for dinner. There was a one payment done through the Amex card statement because it's an employee card, which is an official dinner he has indicated. The same thing he has also taken it. A guy has cancelled his ticket. He got the credit back in Amex card. The credit he said it is only personal credit. The debit was paid by the bank, by the entity. So this excessive claims and unauthorized payments or something which you can do all kinds of checks and things. Suspect
It's
expense,
that's
especially on top of
very
the dates and
easy
time.
to catch. Yeah.
Yeah. Weekends, holidays, midnight claims. On a Sunday, somebody claimed for indication that I've come to office and there is no in and out time in the office, or neither as well as CCTV footage has never come to office. But he claims that he had come to office and claims his lunch, claims his conveyance for being working on a holiday. You can straight away suspect it. Inactive vendors. This is a very interesting area where we found certain frauds happening. Certain vendors become inactive after a point of time. Suddenly you find one-off transaction happening there. That account is used for parking some transaction and taking it out. So we need to be careful when we look at some transaction happening in an inactive vendor. That's why in ERP environment we will tell them any inactive vendor they should block it for the purpose of utilization. It will be released from the block only when a new purchase order is issued. Without a purchase order, inactive vendors cannot be used. This is something which we need to look for from the CCM perspective. Transaction blacklisted vendors. That too coming to directly in see, I would have done a blacklisting in a MM module, but maybe in accounts payable it may come as a service invoice or some other type of invoice which will not be coming to this MM module. Then will actually this is actually happened in one of the cases. Unusual trend identification. Anything that is unusual, anything beyond the average, anything which is beyond the minimum maximum. Well, the maximum is abnormally say 3 times of the minimum in that particular subset of the whole transaction. You can straight away identify that. User access. User access is a very interesting area. We found that in one of the stores in SAP environment, all the goods receipt note were done by 3 people, only in the 3 IDs. Only one ID, which is the head of the department, his ID has been used for receiving only one type of item, only one item. Everything else he was not involved. My suspicion was that why somebody at the level of general manager has to sit and do a goods receipt note in SAP. Then we found those are all the problematic cases. They were not the materials which was received actually. It was water which was appeared as being received, but actually it was liquor which was being purchased. He doesn't have license to procure the liquor, so instead of putting it as liquor, because he will get into problems with the cops, he put it as water. So you don't want anybody else to do it, so it was run by general manager himself, which is obviously a problem, which as an auditor one has to highlight it,
You know,
even though it's
you
a
know, in
designed by the business to.
you know, in our country, there's a lot of Catholics, they probably would have said, unless the guy is named Jesus turning water into wine, it's not possible. It wasn't water. So, it's,
It's a nice one.
yeah.
Yeah, statistical reports as well that we can do. Yeah, exactly. You're right. Jesus only can do that. Exactly.
Yeah, I have an idea. We can do a quick polling question. A lot of you may have come on to find out, well, you wanted something specific for your organization. So I'm going to put a polling question right now. What would be a dream continuous control monitoring that you would want? Okay, so I'm going to give you a couple options: revenue, vendor payments, payroll, journal entries, or other. So what dream CCM do you want? I'm going to open this up and then I'm going to put it in the middle. So the polling is happening right now. I'm going to expand this huge. What would be your dream monitoring if you could do it at your organization? Revenue, vendor payments, payroll, meaning the employee side of things, journal entries, which is the books, or some other item in your organization. So I'm going to give it another 30 seconds for you to answer this polling question about your dream. If you could have one thing that works so well, a process that you could continuously monitor, what would that be? Okay, we're going to end the poll. It looks like it's a lot of you want journal entries, and then the rest is split by revenue and vendor payments. You vote, hopefully. Back to poll. So I'm going to broadcast the results. So you should be able to see. So 27% of you wanted the revenue, the sales cycle. Another 27 said vendor payments. And then 33% of you said journal entries. And then between 5 or 6 said payroll. And the remainder was some other continuous monitoring. We'll close that out. All right, Narcy, I thought that would be a good little polling question just to find out where the audience is at in terms of their needs.
Exactly. All right. Journals is the biggest challenge today, especially in ERP environment, because accounting today has been shifted from accountants. Today, the accountants are not anymore bookkeepers; they are controllers today. Because all the goods receipts, everything is happen at the stores level, and the automatic entries are getting posted. The entire production accounting happens like that. Invoices raised, automatic sales accounting is happening. So journals are the one which is controlled by the accountants, and that is where people can play around. So in all others, you have there's an audit trail available in terms of ERP environment where you can identify the original transaction, what is happening, and the original transaction will be difficult to do. I can say alter in terms of the accounting processes unless there's a teaming between the guy from and the FA happening. So journals is something which is actually becoming relevant today, especially from CCM perspective. Coming to the next part of the CCM is the expense control. There are very interesting expense controls, especially on sales promotion, which we already discussed about. A lot of sales promotion, incurrence, approval, linked to the schemes. They continuously monitor that. What are the schemes that you are looking for? Next is the travel expenses. Same city, different person, same person, different city comparisons. Alert based on the limits. Relative size factor. Anybody going to say Chicago always had a local conveyance claim of say X. Suddenly the relative size factor is increasing. Then you can look at those aspects from that. That is, you can look for the travel expenses looking at from the same person from the different city or maybe same city by different person, and then look for the relative size factor. What is the average comes in? And then the next issue in terms of the repairs and maintenance is a very important area where the asset level control is not monitored, and we can implement that with the help of CCM. Same asset getting repaired regularly. What is the reason for that? They may be moving some pumps and some motors in a big factories from one location to another location, bring it back again. They may be doing it every month just to make sure that the particular vendor gets some job and gets paid. We can identify those with the help of asset level control and see for this asset what are the types of expenses that are incurred, how often it is incurred, it was incurred when lost, is it having any kind of a cycle like every 6 months it happening kind of thing. Taxes, there are various taxes and dues, the social securities and all that. We can build in CCM across all of them. A VAT implication, percentage of VAT, especially countries like India where we have different percentage of VAT coming in. Different states have different VAT, so it's not a central subject in India. So similarly, even in United States also, you have different states have different tax structures. So you can have CCM built on those tax aspects just to ensure tax compliance. Right outward is again linked to the customer order and the policies. This is the one biggest area where people do actually make money in that is with the customer I would have agreed for fight already paid basis, but I may say that to pay basis and make sure that sorry, it should be on the to pay basis instead of I would have done it on a paid basis, and I also claim it, and the customer will also pay to the vendor. So there are multiple challenges in terms of the outward of fight, especially that's the area where there's huge potential to win in CCM, both in terms of destination, the kilometerage, and the amount that we pay for the goods that we have. Next 2-3 slides, I'm going to focus more on FCP, primarily FCPA compliance. In especially across the globe, the FCPA compliance becomes a major challenge. So the very specific focus can be on gift, entertainments, and donations, or I can call it a charitable contributions. Multiple gifts for the same individual, or same individual originating the gifts. Entertainment of any government of affiliated individuals, or maybe even hosting somebody for repeatedly for the same person. Segregation of duties is a very important area, especially for the travel expenses claims and all, especially related to entertainment. The approver and the submitter are one and the same, while we don't have the proper mechanism. Unauthorized travel and expense claims, especially with regard to FCPA related aspects. Suspected organizations with whom, so we are we doing a KYC norm for whenever we give a charitable activity. The organization with whom we are dealing with, are they genuine? Are they really been above law? Are they ensuring that they need to comply with all those laws that they are complying with? Are they operating in the countries where they should not or they should operate? Is there any link to the terrorist organizations and unlawful activities? All that I think we can do that. So we can identify a list of organizations and keep checking with that. Do a dedupe exercise kind of thing whenever there's a fresh new transaction happening. Suspicious activities or bonuses or any commissions of unusual in quantity or timing. Normally, you have transactions which may be happening one day in October we pay selling commission, but suddenly you have some commission coming in the month of December or in the month of August. Look for that. Vendor where alternate pay names have been flip flopped with X number of days. That is exactly I do an alternate. Every 15 days I change the alternate vendor name. Why is it happening? Is there a pattern for that? Is there an established method by which they are trying to fool the company? One time end of payments beyond the threshold, or many times it is happening. A guy who is not a one time, if it's going to happen 10 times in a month. So, is there a pattern there again on the way I'm using the one time end account? Incidentally, I would like to tell that in one of the cases where the number of transaction in one time and all exceeds the maximum transaction in a highest, I'd say maximum vendor with whom we have the maximum transaction. In a month, a transaction, say, suppose a particular vendor does 100 transactions in a month. That's the maximum for that vendor. Any type of vendor that you take. A one-time vendor does around 150 transactions. That means it has all kinds of people who should not be in one-time vendor. So you need to see the one-time vendor transactions. What are they? How does can we put some upper limit in terms of the values, in terms of the frequencies? We can have CCMs in that regard. Payment to risky vendors or from risky uh, maybe countries where or the states where you don't want to operate kind of which is of high risk in nature. Today, for example, from United States, you want to do something with Iran. Obviously, you will not do anything with Iran. Like this, there are countries which you will not want to touch upon. Cuba, like this. Checks made while cash. That's the next important area where we'll have issues. High volume of cash transactions happening. That's straight away a case of disaster. We need to look for what is the reason for that. Who is handling that? Who is handling the cash? Why it is being paid in cash? Are we ensuring that all the tax compliances are being ensured? Hope it's not something which to do with money laundering activities and kind of stuff. Payments made to the country's bank accounts which are sent outside the country for the operations. Where you are vendor within your country, but suddenly you've been asked to send the money to an account which is outside the country of the same vendor, but there's no need for you to do a outward remittance if it's going to be supplied within the country. Look for those cases. Vendor bank account getting flip-flopped, which I've already explained about. These are some of the examples which I would like to give in terms of the FCPA, which we can straight away build in our CCM test. Many more can be done. These are examples actually. I'm just giving certain examples which will help you to understand how we can build in. Yes, Sonia.
Yeah, and I wanted to share a story about a client that, in terms of the payments outside of the country. So this is actually a colleague of mine. He had a controller. He's new to the position. He oversees the controller. Controller was part of a phishing scam. In other words, it's an email that looked legitimate from a vendor requesting a wire payment, or else there were going to be consequences to the company. There were going to be consequences that something was going to be delivered and on time, and therefore the graphics on this email looked legitimate to a point that it looked like his other supervisor had approved that wire, but the wire was going to somewhere out of the country. So he created the wire, he sent the wire out, and my colleague who just had started with this company as a VP asked the controller, like, well, where's the backup to this? You know, there's a threat here about a delivery, but you needed to wire this money outside of the U.S. I mean, where's the backup to it? Where's the original invoice? Where's the signature from this? All you have is an email. Turns out that it was fraud. Okay, but to your point, there should have been an automated alert saying, you know, you could, number one, you can do it on the bank side. You can set up your bank account so that you cannot, unless it's two people approving international wires. Okay, so you can set that up with your bank. But more importantly, whenever there's a transaction in terms of cash going out outside the country, you can set up in terms of your accounting system to catch that as well. And in terms of the vendors where the bank accounts have flip-flop, we've seen this as well, where um, it was actually to an employee, where the bank account to the vendor, the routing number and account number were a certain routing number and account number, and then altered to an employee's bank account and then reversed out back to the vendor's appropriate wire. So it was obviously a kiting situation where, you know, they eventually can't keep the circle going. But I wanted to ask another quick polling question, because this is fresh in the United States. It will be implemented 2015. There's a new audit standard for the external auditors to try to catch corruption, and it's dealing with related party transactions. So we auditors had, or the external auditors had, a rule of trying to talk to their client about related party transactions. In other words, how do we know you're not selling to a sister company and vice versa? And more importantly, who are the members of that company? So it's both on the revenue side and it's also on the vendor payment side for related party transactions. So the PCOB, so this is going to be implemented for publicly traded companies. The PCOB had approval last year to increase the audit effort to identify related party transactions. In other words, the bar has been elevated. So my polling question to the group is, are you even aware of this new audit standard that is going to be applied this year, and it's going to impact companies in terms of your efforts of identifying related party transactions? So you can no longer do only an audit inquiry, you actually have to go through all your data. You have to have some evidence that you've analyzed the transactions and therefore you know that these are not related party transactions. So, how many of you are aware of this new related party audit standard? And for those of you that it doesn't apply, I put that doesn't apply item there as well. So, it looks like I'm going to close it out in just one more minute, or I mean, in about 30 seconds, and I'll broadcast the results. But this audit standard was to help in terms of identifying any foreign corrupt practices because a lot of U.S. companies that are publicly traded and they report to the Securities Exchange Commission, almost all of them have interactions overseas, and therefore they want to make sure that if there's any related party transactions that should be disclosed or identified, that they're being disclosed and they're being accounted for properly. So I'm going to close it and broadcast the results. 42. It's a 42.8% of you said that you do know it. 42.8 also say you don't know it, and then 14% it doesn't apply to you. So I'm going to end that poll, but it was a good kind of question to see where people were in terms of understanding that new related party transaction audit standard.
That's good. I would like to say that even in India, the related party transaction become a new pain point because in the Companies Act they've made it much more stringent, like almost like the way it has been done by the PCOB. Only thing is in India it's applicable even for non-listed companies, so it's even more tougher in India to do now a related party transaction. So coming to the next item in terms of the expense control, some of them which we are now talking about are being already discussed by us. For example, the expenses that are related to attorneys, accountants, agents, consultants. So major area where you can have a test done in terms of the CCM. Identification of payments made following manual overrides in the system. This is again a major pain point. That is, all the services and activity normally should undergo a, say in SAP environment, it should go through a process called service entry sheet. But there can be a situation where they do an accounting of some consultant payment directly. Keep an eye over that. Identify the kind of CCM methodology by which such transactions are coming out of the CCM. It will be, otherwise it will become huge, task for you to identify such transaction independently. Manually to identify is going to be difficult, so you need to have some CCM to put in place. Payments as classified as expenses to government without any kind of supporting or backup. And similarly, in terms of suspicious activities, manual override in case of direct accounting in GL. This is primarily what we call it as journal entries. Advances to expenses, primarily when they shift advances to expenses without any supporting, any journal entry. SA transaction in SAP environment or AB transaction, we call it as SA and AB transaction, should not be there in those accounts which are being operated. Suspicious entries in terms of the temporary accounts. Anything. These are all illustrative examples which I would like to give, but they are all complete examples in which we can do multiple CCMs actually. Till now, we have spoken about the general CCM applicability for irrespective of the industry. Now, I'm taking you through the next half an hour with the help of the case studies in hospitality industry, which are of hotel primarily. These are live case studies. I'm trying to bring in industry-specific hospitality expertise that we have. In hotel industry, we all know that revenues are recognized based on the customer interface that they have, the guest, and every interaction with the guest and the employee of the hotel, we call it as moments of truth. So the guy has to decide at that point of time what needs to be done, what has to be done. So the transactions of high volume, but per transaction ticket size is very low. In a typical hotel, maybe $4,000 to $5,000 per night will be the spend that you do, even if it's going to be a five-star hotel. But number of rooms will be 100, 150, 200. So the number of transactions will be large. So we need to have set up an automated process by which we are able to manage the revenue leakages, both with regard to specific transaction patterns and also exceptional transactions. Both patterns means is there a specific activity, an allowance or negative posting happening in a particular ID only continuously? That kind of pattern, or is it happening only in one shift? There are illustrations which I'm going to give in that regard. Identify exceptional transaction happening. There are also specific cases that we do. So we can have CCM built around that, and we have done it for all. In terms of revenue, there are almost 32 checks that we can do for hotels, irrespective of the property management software that they are using, whether it can be Fidelio, Opera, Amadeus, Springer Miller, or even Simotel of SAPs. It can be any PMS. Each PMS has its own vulnerability in terms of weaknesses, because they are all tuning the PMS more from customer perspective, interactive, much more easier for the front office management to handle it, not from the audit and control perspective. So those open items are to be monitored with the help of CCM. In the process of identifying potentially fraudulent or suspicious transaction, potentially non-compliant transactions is what we are looking for. And also identify the exceptions recorded with specific response system. See, once you have CCM, this is what I want to tell about. In all the CCMs that we have spoken about, in the initial slides when you see, we were speaking about the alerts and the management actions. Today, majority of the CCM doesn't capture the actions of the management. Why it has been done, why it is ignored. In hospitality industry, we have implemented with a response management system. That is, I found the exception. The exception is identified by CCM. It comes as an issue. How that exception is handled by them, what is the response that they're giving, and how the response is getting captured in my response management system. So when you go for audit, you don't only look at the CCM part, you are also looking at the responses for those exceptions that have been identified by CCM and how the responses have been managed, actioned upon. So the response can also be validated on a sample basis by the audit. Are they are the exceptions which have been identified and explained by them by your response management, is it done properly? I'll also explain about in the other slides about how it is being done. So detailed audit been getting replaced with a much better exception-based monitoring mechanism. Hence, the audit becomes much more simpler. Instead of, and hence you can even reduce the frequency of the audit. You need not do it annually also today. And we have done it across hotel chains, including international chains like Marriott and also Shangri-La. What are the possible revenue level control, especially for the room revenues? Again, I'm telling you, irrespective of the property management software they use today, hotels have all moved to use some software at least for the purpose of the front office management. But all of them have these issues of negative postings is one area, important area, where against the revenue department code, where there is a, I can post a negative posting by which I'm giving a waiver of the revenue, negating the revenue. Negative posting is the biggest challenge. Allowances after checkout and settlement. I'll explain to you about this. In our front office, there's always an option called allowancing. That is, I can waive off a portion of it. For example, as per the contractual terminology, I might have a contract with a particular city corporate. I may say that I'll give them the rooms at a particular rate, and for food and beverage, they are eligible for 10% discount. This 10% discount is passed on as an allowance in the front office. The allowances that are happening as contracted items can be normally identified. There are no exceptions there. But an allowance which is happening after the settlement or after the checkout, guest checking out, is something suspicious, because it will not be part of my invoice that I'm giving to the customer, my guest. So there's a methodology by which we need to identify the allowance, whether it's happening after checkout or settlement, by looking at the timing of the allowance and the timing of the checkout or the settlement that is happening. So we need to link multiple information available in the software, like to determine the timing of the allowance, we can take it from the particular methodology. But to determine the what is the time of the checkout or time of the settlement, we need to go by the user log available in the system. So I need to compare both the systems in a sequential manner, looking at the timing, and then do that. I'll explain with an illustration with regard to that. Lost postings. Most of the PMS have interfaces with various things, including your telephone calls, your minibar system, your internet connectivity system, your interactive TV system, and all. When the interface doesn't get posted, allow them to post a file because of some IT related issue, it goes and sits in a place called lost posting. That is, it is not able to post it to the room. Ideally, somebody has to review that and then repost it manually before the guest checks out. If the guest checks out, then after that you can't post it. You can have a CCM for this item. Day use exception. Day use is a very unique concept in hotel industry. That is, I allow a guest to check in the morning and check out in the evening. In a hotels inside the airport and all, where people will be checking in and checking out only for 4 hours and all. So a same room will get sold beyond once in a day. So in that case, I need to have 3 times the revenue for the same room. People can misuse it here. One room can be sold once in a day, but if you're going to sell the same room beyond once, people can avoid putting the revenue there and use it as a methodology by which they can pocket the money. Day use exceptions can be specifically identified with the help of CCM. Multiple login failures. This is another key issue because IT controls have to be very, very strict in terms of the PMS. So if anybody attempted to use somebody else login, because the minute he does it in his ID, he will get caught, whatever he does, because it can be captured. If he does in somebody's ID, it will only the other person will get caught. So people attempt to misuse this. Actually, it's the biggest problem in the hotel industry. Multiple login failures, so we normally look for. Reinstatement of no-shows. This is a very interesting case. I booked my room for a hotel, and in that hotel, I have advance paid. And I know I paid for 1 day advance, and as I'm not going to be in the hotel, I'm going to get that advance getting forfeited by the hotel because as per the conditions, I'm going to pay 1 day's guaranteed advance. In this case, what I'll do is the front office guy is smart guy. He will say that I will reinstate a no-show booking for a walk-in guest and take the advance in cash and show the advance of the no-show against the walk-in guest and only change the profile name, that is only the guest name. So effectively is packeting the cash that he is having and adjusting the advance that he received for the earlier reservation, which is becoming a no-show now, against a walk-in guest. This can be identified by comparing 3 different reports from the any PMS, and then we can identify that. All transfers, any transfer that happens between the folios, between the rooms, you are now going as a group, maybe from your organization. Some of you will be staying in different rooms, and somebody will be paying for some other person. You might instruct them to do the transfers. Are the transfers really related transfers or unrelated transfers? If you're all from the same group and it's happening within the group, then there's no problem. It's going to happen with an unknown person, unrelated transfers, then there needs to be an alert for that. Similarly, splits can happen, or maybe one person can pay for 4 people, and they can instruct them to split it into the other 3 people so the individual rooms to be posted. But in this case, again, is the split happening between the group or between independent people who are not anywhere related to? We can have CCM built for that. Discount amount changes or the rate changes. Very interesting thing this is. I check into the hotel. At that time, I've been told it's $1,000 room night. After 3 days, my value of the room that they're going to charge it now comes down to 850. If they change it to 850, from that day onwards, it will get booked only at 850. Is this change in rate authorized or unauthorized? Who has approved it? What is the methodology? Because normally it won't happen, right? For anybody, when you check in, it won't happen. It should not happen. So those are exceptions. Those exceptions has to be monitored. That we need to bring it as a CCM. Reinstated folio. As I was telling about the where you can do an allowance after checkout and settlement, you can do a reinstatement of the folio and then do an allowance as well. So reinstatement of the folio means after you do a checkout, I'm reinstating the folio again to do certain manipulations. So anything that where you have done, you have identified a reinstatement of the folio, then all transaction happening after the reinstatement has to be minutely looked at. Missing room revenue. This is a very, very important aspect where you allow a guest to stay into the hotel, but you don't charge any revenue. Room occupied but no revenue done. This you can do by just comparing the key card data, because the access key cards are there electronically stored. The key card data with the revenue charged, and then compile that. AR invoice transfer, that is, you have a city ledger invoice. That is, a invoice is to be sent to a company directly and not to be settled by the guest directly. In that invoice, you have certain transfers from other cash settled folios. Wherever it is a city ledger invoice, you need to carefully see whether there is any transfer coming into that invoice. If there is what is it? Is it really genuine or not? These are only indicative lists. You can do around 32 odd checks that you can do. It's huge potential there. I'm going to give for some 4-5 individual case studies. Sequence based is one which I'm telling you. This is a computational involvement here because I need to sequentially do a test here. In this case, allowance and paid outs are being paid out is where they make the cash refund. It's called as paid out in hotel industry parlance. So, how to analyze the allowance and paid out as a sequence and connection with the time of the checkout and identify the report and instances of that. So, typical case, one ABC has checked out at 1:15 afternoon after paying her bill totaling up to $6,000 for one night stay, including various incidentals that she has spent on. She does not wait for the bill because she is in a hurry to leave to the airport. Now the cashier handling her bill takes an allowance of $1,000 in the folio at 1:18 hours and shows settlement of only $5,000. So the $1,000 is missing. If you look at it as an allowance individually, there may be thousands of allowance in a day. Very difficult to identify. But if you look at it from the time sequential point of view, this is an allowance which happens after the checkout. You can easily spot it. All allowances after the checkout. General manager of the hotel has to look at it, reason it, why it is so, and need to sign it. That these are clear fraud indicators.
Hey,
And
Narsi, can
there
you
can
speak
also
up a
be.
little bit?
Yeah, are you able to hear me clearly?
Yeah. Okay, that's better.
Okay. Okay. Sorry. So I'd like to explain it again. In terms of the timing one, where the guest has checked out at 1:15, the allowance absence happens at 1:18. So the sequence of the timing is important. Similarly, if there's a paid out has been posted, the paid out is posted after the guest departs. So the guest signature will not be there. So they need to forge the signature. If you look at the signature, it may not be as same as the signature in the registration card. So you can straight away identify that as well. It will also throw up some view. This is one exception that I'm looking for. The second one is unaccounted or missing room revenue. It's a very, very interesting case. Well, they use transfer by omission and then make sure that it is getting, it's not getting caught. And they also identify that. First, a guest has been do a they he has been posted with a room charge. A second guest room was not charged; it is only nil by changing the rate code to 0. See, I can manipulate the posting of the room revenue in hotel industry by making the rate code as 0, by which no revenue will get posted as a room revenue for the day. So the guy has done that, and the cash was collected from the first guest. After cutting the cash, he appropriated the cash, so you cannot keep the revenue there because that will be hanging as an outstanding revenue. So to avoid that, he transferred that revenue to the second guest, and then the transfer has happened to the second guest with the help of the transfer posting, and the collection from the second guest was set off against the first guest charge. So I've actually charged for both the guests in this case. One guest I've packeted, other guest I've accounted as revenue. In this, the guy has used 3 or 4 functionalities. One, rate change modification process he has adopted. Rate code has been made as 0. He has used transfer posting. All the 3 which I've identified earlier as a potential exception that we need to monitor. By linking it, looking at the transaction, you can identify a potential fraud in this case. If you look at the next one, this is typical query where how it is being run. I have said identification of transfer between the unrelated folios, unauthorized, also good kind of rate changes. You also have the where there's a billing happening in the system, but it's getting transferred out. Next one is a very interesting case, misappropriation of cash where an advance is collected as per the collection policy. Guest will short stay. Suppose I'm intending to book my room for 3 nights. I paid my advance as per the policy 3 nights stay. I'm going to stay only for 2 nights. On the third night, I'm not staying back, but they said they will not refund the money. The guest is told that advance will not be refunded, but I will post few charges from the folio and allowance of those charges and take the money off, or I may take a waiver approval from the GM independently, take a refund by forging the signature of the guest. Both the cases have happened in the past where we found that the people have adopted both the methodologies of both allowancing and also taking the refund after getting the approval. So GM will be genuinely thinking that he is benefiting a guest, so the guest will be happy, but the guest will never be happy because he will never get the refund. It's a guy who is making the money. So in this case, both the allowance and the refund are used. Next is the pattern of testing. I'm little just rushing down because we have 10 more minutes to close, so I have a couple of more case studies to do. So if you have any doubts, maybe you can raise hand. Maybe we can discuss offline separately. Pattern-based testing is a very interesting case where you have this buffet. Actually, she was explaining about one of the cases where about the lobster, if I'm right, that was the illustration that she was explaining. This is typically like that. Buffet breakfast will be served only in the breakfast time because it will have a differential pricing than buffet lunch and the dinner. We found in a particular case where the buffet breakfast is offered during lunchtime. And it was not many, it was only 3-4 cases. So the front office manager said it's all minuscule, maybe by mistake people would have punched. First of all, in the configuration, there's a mistake that shift-wise menu availability has not been configured. So systemic correction has to be happening. So that we straight away told the IT guy to change it now. We need to see whether anybody is playing around in this. Management said, no, 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 it's only 4 instances, don't bother. But we still went by, we still went ahead and identify the subset. The subset is only buffet breakfast. I'm bringing down the SSD, that the same concept which Mr. Mark Negroni has explained in that subset level. What is the duplication that's happening? Buffet breakfast is being used in lunch at the subset level only for lunch. So we isolated that and then compared for the 2 months period. Then we found it is being done only during lunchtime, only during weekdays, only by a specific waiter, and whenever the waiter is on leave, it was not happening. So he was favoring.
Oh
So
man,
he was
finding the white goose in a pond of black ducks.
exactly. If you are looking at the subset level, then the whole thing comes into a picture. Otherwise, in the whole, if you see the total population, they say, no, no, we do 150 covers for lunch. Well, there will be 150 invoices in a day. In 4 cases, we have incorrectly used buffet breakfast. Don't bother. It's a minuscule. It's one-off case. You should not be making it as a big issue. A typical response from the auditee to the auditor. But when we look at it as a pattern, look at the person who is doing it, the timing of it, and link it with the attendance of the person who is doing it. Whenever he is on leave, it was not happening. And all of them are settlements by cash. Then we are able to see that there's a pattern. And we
Right.
went through this.
There's a story about the U.S. Navy hired Mark Negroni to do that subset that you're talking about in his book, where you
Ah,
take it down 4 levels down, and he did it with debit cards. So the Navy was giving
exactly.
out debit cards, and it got down to a level where it was by officer. You could tell, like who was really pocketing the cash and misusing the debit card. So
Exactly.
it's in other words, it's a very true model to audit more efficiently and just kind of eliminate the bad actor, so to speak, in the party.
Exactly. Okay. Next is, we all know that in case of buffets, you have this same, the amount is same. It's only buffet lunch, and it will only question of number of people will be changing. In a table of 4 or table of 2, it's going to be 2 packs or 4 packs. So the same invoice, the bill, when we say bill in India, it's invoice primarily. The invoice can be reused. What happens is, that's why we used to call it as delay in settlement is a critical control that we used to do it in FMB checks. When we do the food and beverage checks audit, we used to look for the delay in settlement of the buffet bills because buffet bills cannot be kept open beyond say 45 minutes to 1 hour because it has to be settled faster. Especially after printing, it should be settled within 15 minutes time. This guy in a particular restaurant was using the same buffet bill for 2 packs for multiple tables and taking the money. Cash was collected, and from the first one and the second customer was also given, and it was not accounted. A special engagement was done to test this, actually we noticed that there are many instances of reprinting of bills. So what we can do is, in this case, we can do multiple way of checking that in a CCM. You can even build to the level of layout level and see the layout level whether all the tables are being occupied, because every table in a hotel has a number, the table number, whether every table number is occupied during the buffet, and see whether there is a linkage to the billing that has been done. We can also see the settlement, delay in settlement, reprints, open a query for regard to total of any checks which have been printed beyond once, what is the reason for printing, and all that we will be able to establish.
But it goes back to your earlier comment. Like in the book, it's you're going down to the subset by login, because that's where you're gonna. That's where that third part of the triangle. So you have cache, you have
Yeah,
you have cache, so you know that's a type. Then you have reprint, which is a functionality, and then you have user account, right? Who's doing the reprints on cache? So there you have the perfect triangle, because any general manager would say, well, wait a minute, yeah, how come? I mean, just that test alone, the general manager is going to say, this doesn't seem right. Why is Joe always reprinting these receipts whenever he's on shift? He always seems to be reprinting receipts. That doesn't make any sense.
exactly. Next is an interesting question. In any bar where we have the liquor being sold in a hotel, stocks can never be same. It can never tally. There needs to be an excess stock in almost all the bars, because a liquor is poured in mls, or I can say pegs. So there will always be a short pouring after a point of time in bars. If any of you are in a high, you can see that as you go high up in the high up in the spirits, the the consumption goes down, actually speaking, because he's not pouring you the full peg actually in that. But in a particular bar, we found that the stocks were perfectly tallying. Never is always perfectly tallying. Never always. And then we found that all the excess stock that was then were being sold and packeted by the barman. Daily few shots were not billed by the barman, and related cash collections were also packeted. Bar stacks were not being reconciled on a daily basis, so the reconciliation was not part of the CCM initially. And we were able to build that as a CCM thing. And I would like to say one more thing here. There is one more instance where we found that a barman was bringing his liquor. This was again identified in the CCM. He was selling more liquor than what he should sell, because he has a stock of only 10 bottles of a scotch whiskey, but he sold 12 bottles because he bought 2 bottles from outside. And in a 5-star hotel, your selling price is very high. So he was taking that margin on those 2 bottles. He got caught when he won't do the settlement of those 2 bottles in the system, and he'll take the cash. Guests may not know whether this particular scotch is owned by a hotel and then being sold, or is being it is being sold by the barman. So in a CCM, we were able to identify that. Next one is a very interesting case of identification of duplicates, fuzzy logic, as we were talking about, matching the identical names. Here you can see as it flashes out now. It's the same vendor name. Its invoice number is same, amount is same, but different dates. You can see the table up that we can have different. Its exact matching is one: invoice number, invoice date, vendor, and amount. There can also be exact, different, exact, like this, all kinds of permutation combinations. We can use any of this as similar to fuzzy magic logic, where we can use this alternative mechanism by which we can identify and create a subset. And out of the subset, you can look for the further potentials in terms of duplicates and look for the suspicious transactions. Unbroken invoice sequence, a very interesting case, this one. This is the last slide that I'm looking for. I know we are almost close to closing time. This is actually a case where a continuous serial number from a particular vendor has been only with me. 85% of the invoice numbers are continuously serially numbered. That means a very clear case where I am the only customer for him potentially. So in that case, we need to tell the purchasing team, we need to tell the buying team, both of them in primarily telling that they need to talk to the vendor, find out what's happening. Yeah, is he a genuine vendor or maybe a fictitious vendor, possibly. Okay. I've given you some of the 7 case studies which have given live examples of how CCM was used to detect those frauds. Now, this is a very interesting methodology by which a CCM with the response management is indicated here. See, this has been again live implemented solution. This solution is implemented in Dubai by us for a group of hotels, where we extracted the input data from a source data, that is a folio. Here you can see here the folio, the initial information that comes out from the extraction that is happening from the Fidelio, which is the PMS system. From the PMS system, we take the data extracted to the ACL script running execution system, where we run the ACL. The exceptions are identified. A set of ACL scripts have been run in that, and then we'll bring it down to the server where the data are stored for the responses. And for that, we actually take it to an SQL server where we have an exception which have been identified by the ACL are moved to an SQL server where we introduce a response management system. You can see here it's a response handling system which is run in SQL, where the users, the front-end managers, in the front desk will put exceptions with the explanations why they've done it so. And these responses are stored. Based on the responses, and they are moved into SQL Server, and the reports can be generated based on the responses itself. For example, early check-in is one of the aspects that is there in the hotel industry. Early check-in is you have a check-in time of 12 o'clock, but you allow the guest to check in at 8 o'clock in the morning. I don't charge for offer-day charges. It can be waived off, but what is the reason for the waiver? They capture that actually in this response management system. An exception is identified and the exception is reasoned out. If they say is a regular guest, when you go for an audit, if they put as a regular guest, you go onto the guest profile and see, is he really regular there? How many room nights he has stayed in the hotel? If you have stayed only 2 room nights, how can you call it him as a regular guest? So this response management become more scientific because it is happening on the day in which the particular event has happened, and your audit may be happening after maybe after 6 months. They can't change the response then because the response already been stored. So you can't hear a cooked up story by the auditee, and the audit becomes more meaningful with responses being managed, and your audit is on the responses to the exception than the exception itself. So this is to take the CCM to the next level with the response management. Last, I would like to mention about the technology that can be used. See here again, I would like to mention that technology what you use is not the main. It's only the what you want to do has to be known. We need to define what needs to be monitored. We need to define what needs to be tested. How all the input data is going to be defined. Once you design that, then the technology is determined mostly with the help of the cost considerations only, because most of the tools can do many of these functionalities. So whether it's a ACL or Excel or not, so technology is primarily based on the cost of the benefit that we have. So in this graph, which is being used by ACL also, the cost to the company from resulting the very poor control and just cost of implementing and monitoring control is what we need to look for. In a continuous monitoring, it obviously improves. That you are able to see that the cost of control comes down because you are continuously monitoring the control in a better way. So automatically your level of control goes up drastically.
Great.
Sonia would like to, yeah.
Yeah, no, thank you, Narcy, for kind of explaining some of the technology. And Rumkey and Narcy have been providing us a lot of value on. They put together a lot of case studies. I think there was a 6 or 8 in there. And what I had asked them to do is, as a complimentary item for the live people here only, to do a free 1 hour assessment in somebody's continuous monitoring process. So, in other words, it's a free 1 hour consultation with the three of us about where you're at, where you're trying to head into, and then some of the key points or best practices that we would basically give you a report. Most of you know my report. It's priority driven. It's standard driven. And when I get together with other firms that we partner up with, with Rumkey and Narcy and Rumkey, what I'm getting at is we can create a comprehensive report because we have two separate firms with different specialties, all related to internal audit. It's just we've seen different continuous monitoring techniques, especially with ACL, IDEA, and some of the other tools that you're looking at. But you have to email us today at info@avivaspectrum.com. And then just to conclude, it's not about the software, it's about the methodology and the people and the process that you're going to be doing the CCM. And for those of you who want free resources, COSO has a free PDF. I know actually there were 3 emails or chats. You guys want the slides. You know I'm very famous for giving the slides away for free. This is a hyperlink. You can't see it here, but once you download the slides, it's a hyperlink to that actual product that COSO has on items dealing with continuous monitoring. It's how to elevate success, and it's free. Another is those of you who are on, we're supposed to be COSO implementation group members. Please be part of it. We're starting to cancel people out that are not members of this group. So you got continuous education here. You got a lot of value. And like I mentioned earlier, that 1-hour offer, I go through some of the COSO transition items. We cover some PCOB, SEC guidance, and we're limiting to you 5 people because my time is valuable, and so are my other firm members. So again, email us at info@avivaspectrum.com. The subject matter on that email should be CCA reservation, just so we know you're part of one of the 5 for today's webinar. Here's my contact information coming up here. I'll cover that. This is a typical CCA report for those of you who don't know what it looks like, but we actually work with our other firms. We do the interview. We come up with a comprehensive report. Usually it's about 3 pages long, but it gives you a good sense of where you are to implement the continuous monitoring. And even if you have a system now, we can give you some best practices to take it to the next level. Usually it's anywhere from 5 to 10 other scripts. So connect with me. I've got my connections right here. And I'm leaving it open for any questions that you guys may have for the next 5 minutes. We appreciate you guys being live with us today. And these are all the spots where you can get the slides and also some other videos that we've done in the past with interviews with chief audit executives dealing with continuous monitoring as well. So I'm leaving it open for a couple of minutes for any Q&A for those of you who'd like to ask our guests or myself any questions dealing with continuous monitoring. Okay, I don't see any questions other than slides. Okay, I don't see any items here. So Ramki and Narsi, I want to say thank you for being with us. I know it was very early in the morning in India right now. I'm in New York, and most of my staff is in LA. So we actually had 3 different time zones going all at once tonight, and I know it was kind of a late webinar, so I want to say thank you, Ramki and Narsi, for being with us today.
Thank you, Sonia. Thank you for this opportunity. It was wonderful to be with you, and I think we'll do more things often. Thank you.
Excellent. All right, well, this is Sonia Luna signing off, and we hope to see you next time on our next webinar. Thank you.